Well, I'm LifeBlood. This is George G, and the time is right. Welcome to today's guest, strong and powerful Douglas Eze. Doug, are you ready to do this?
Yes, I am. How you doing?
I am doing great, man. Excited to have you on. Doug is a CFF. He is the president and CEO of Largo Financial. He's the author of Creating Generational Wealth, What the Super Wealthy Know That You Need to Know. Doug, tell us a little bit about your personal life, some more about your work, why you do what you do.
Yeah, man. I've been in the financial service industry for over 20 years, and I started when I was 24 years old. I was waiting table at IHOP when somebody introduced me to the business, gave me a business card, and I went and checked out the opportunity, and it made sense, but I didn't know nothing about finance, and she, the young lady that introduced me back then said, well, this is what we do. We help families plan for the future, plan for their children's college education fund, and all those good stuff. And she said, but you do need a license to get started. So I proceeded to get all my licenses in the financial world: life insurance license, health license, securities license, so I could offer investment products. And then just as I continue to grow in the business, I have 4 kids. I have two from my previous wife, and then I adopted two more, my brother's children, because he passed away in a plane crash. So
Oh,
yeah, in West Africa, Nigeria. So I was able to just, tap step right in and start taking care of them and bring them, to the US and just make them, give them a better opportunity as well, just like I have. But other than that, just life is good, where our company is growing. And today I also own other companies. I also own a technology company where we do global GPS tracking device. Where we track cars and fleets, in different parts of the world, not just in America, but to global technology. Because my business partner is actually out of West Africa, Cameroon. So he developed the technology, I financed it, and then we became partners. And we're looking to do major difference in the world and help do our part to kind of help, reduce the amount of kidnappings that's going on in the world right now.
well, certainly grateful for that. And
Yeah, man.
what a journey that you've been on, from waiting tables at IHOP to, being the chairman CEO of a financial firm and investing in new technologies all over the world, and then helping to alleviate the obviously horrible problem of kidnapping. So
Yeah, it's crazy.
totally crazy. When you look back, is it surprising to you, or you say, yeah, I always knew that I was going to enjoy this kind of
Oh,
success?
yeah. No, it's actually sometimes I wake up and I pinch myself. I'm like, man, is this really happening? A guy with just a high school diploma with no college degree, from West Africa, Nigeria, now in the US, living the life, living the dream, and just making a difference. It's still a shock sometimes, but um, did I see this happening? I mean, I knew I was going to be successful somehow. I doesn't know how and what's going to happen in the process and how that part is going to lead me. I didn't know just meeting somebody while I was waiting table at IHOP and having an open mind to speak to them and go sit down and have a conversation will lead to all this today.
Life's a funny thing, right?
Yeah, man.
Awesome. All right. So when you are, in terms of your work with Largo, where are some of the areas you find you're having the biggest impact?
Yeah, so what we started doing when I got into this industry and started to start up my own company, is sitting down with families, talking to them about saving for the future, retiring, and all the other stuff. And I realized a lot of times people are just trapped with money. There's so much debt. I couldn't really help them until I ran into a mentor of mine that said, we got to figure a different way to help families save more, because at the end of the day, the government is interested in their money, the banks are interested in their money. So what if we could help families find money in places that they're throwing money away unknowingly because they don't know they're doing it, and unnecessarily we could fix it. For example, the way people pay their mortgage, right? That's a big part of the American families. At least a lot of their income goes to the mortgage. And so the way they pay their mortgage, the way they pay taxes, the way they contribute to even a qualified plan like a 401k, IRA, TSP, those type of accounts, the way they even plan for their children's college, right? That's under wealth transfer we found. And even the way they make major capital purchase, going on vacation, buying a car. So we realize that there's so much wealth that's being transferred away unknowingly. And if we could recapture those dollars, for example, there's so many people that make extra payment on their mortgage. And the question I always ask is, why are you in a hurry to pay off this mortgage? And they're like, well, I don't want to have a debt. I said, okay, that makes sense. I understand that. But you're using money that should be going to a compounding interest account to pay a simple interest loan off. Don't you want your money to grow for you so that in the future you have the money there for you? Because at the end of the day, I'm assuming you bought a house that you could afford, not something that you couldn't afford. Because that's a problem. So many, they overstretch and purchase stuff they cannot afford. Buy something you could afford. You get the loan from the bank because the banks make money, right, off of loans, right? So get the loan. They already give you the money. We already know how much the interest is because it's amortized. We know what the interest is going to be, what you're going to pay. Why are you in a hurry to pay them off? If they give you a loan for 30 years, take your time. Don't rush yourself. Invest the difference in the money in something that's going to grow compounding for you. So those things that we started doing, and today we've been able to help so many families get out of debt using a simple strategy that we've built, to get them out of debt, even their mortgage. And we still show them how to pay the mortgage off in less than 9 years. And their credit cards, their student loans, without them ever having to use extra money to do it. Instead, we teach them how to use other people's money to pay off those debt and build wealth at the same time. Instead of the traditional way where, pay off all your debt and then start saving and building wealth. Well, we're older. We're getting older. We're not as young as we were 20 years ago. Every year is a new age. So you can't wait to pay off your debt because it could take you 10 years to pay off your debt. That's 10 years that you've lost. That could have made so much difference in your life.
So it's, I think that there's a lot of important things there. First and foremost, just recognizing how much money that we pay in taxes, because we get taxed on essentially everything. And so recognizing that and then looking around and say, okay, maybe there's a better way to do that. And then looking at different expenses and how we're allowing other people to leverage their money like banks. And instead of sending the bank all the money so they can do whatever they want with it, why not start investing in ourselves, for lack of a better term, and have an opportunity to grow money compound. And I totally appreciate that. While we are really interested in paying off debt, which is really, really important, but at the same time, why don't we also focus on making sure that we are paying for ourselves or saving for ourselves, because money is certainly time sensitive.
Exactly. Very time sensitive. And, so when I listen to and hear people talk about, you make extra payments and all the other stuff. And I'm guilty of that. I used to teach people that years ago, until I sat down and spoke to a very wealthy person that said, why do I need to pay off my house? My house is not an investment. It's not making me any money. So even if it's an investment, I don't even want to pay it off. I'd rather have debt on the house, because when I have debt, but I have more money than debt, then I'm not really in debt. I'm like, wait, say that again. He's like, think about it, Douglas. If I have more money, so if I owe $100,000 on my house, right? And I have $400,000 cash, my house is actually paid off. I'm like, yeah, you're right. He said, because my 400,000 is still making me money and leveraging. I'm leveraging that cash to go make more money. Why am I worried about $100,000? I'd rather use the bank's money, just like they're using my money. I'd rather use their money. And because I also have cash and I have credit, the bank will give me money at a very, very low interest rate. I'm like, man, you
blowing my mind, right? Like, holy cow. I think that's, is it that people want peace of mind? That's got to be part of it. And just, okay, I don't have a mortgage and there's value there, certainly. And recognizing that if my mortgage is $400,000 and I also have $400,000 in an investment, that I could take that money and pay it off if I ever wanted to.
Exactly. And that's the comfort. That's the key, knowing that you have money that's growing and making you more money than the house that you live. It's a house I live in. A mortgage is just like I call it the new rent, basically. You're renting. The bank is your mortgage, is your renter, is your landlord. The only difference between this new rent is the bank don't care if your roof is leaking. You got to fix it. Unlike, unlike the traditional renter, the landlord, you call up the landlord, listen, dude, the roof is leaking here. You need to come fix this house. So same thing, but we got to make sure our money is working for us. And most people, when I ask them, so why are you in a hurry to pay the house? They say, well, I want to leave it for my children. I'm like, really? Your children? Let's get on the phone right now, call your kids and ask them if they want your house.
Like, oh, I never thought about it like that.
Right. Your kids don't want your house. They want money. They're going to sell that house so quickly. We'll be like, what happened?
Yeah. Where's that house I left you? About that. Yeah, I think I think it's a very, very logical thing to say, well, I want to make these extra payments to the bank, but then you realize, or if you look at it the way that you've been talking about, if I do need the money, is the bank just going to turn around and give it back to me? Well, no, it's definitely not that easy. So
No. They make you go through hoops to get the money. They don't care if I don't care how many times you've been to the bank and you spoke to the bank manager and you're all smart and you drink coffee with her or him while you're sitting, get in there with your wheelchair when you're in an accident and you're in a wheelchair and you stroll into the bank and say, well, I was in an accident. I can't pay my mortgage this month. See how quickly they start foreclosing, writing on the foreclosed paperwork. Because
they're
they
going
don't
to
care.
take
They
that
want
coffee
money.
away. Yeah. There's no doubt. All right. So what are some of these vehicle strategies? How do we go about doing that? If not sending the money to the bank to make extra payments, what are the options, alternatives?
Yeah, so there's a difference between saving money and investing money. That's the first thing. We need to savings is basically where we park money until we're ready to invest it. Unfortunately, so many people jump right into investing without really having an understanding of what type of investment they're putting their money in. There's so many people that have taken all their hard-earned money and invested in real estate and have no idea what goes into that, and they lose money. Because we never hear about the people that lost money. We always hear about the winners, right? So one thing I teach is this: save money in a vehicle that has been around for hundreds of years. That's where you save money. One of those vehicles is what we call cash value insurance. You never hear people talk about that anymore. You hear a lot of negative press about it, but so many families, especially wealthy families, when I was doing my research, when I was writing my book called Creating Generational Wealth, started researching families and started realizing Rockefeller puts a lot of money in life insurance. Walt Disney, before he started his company, the banks said no, they won't give him money to start Disney World. Guess what he did? He took $100,000 out of his life insurance to start that company. Look at how big, that massive that company is today. J.C. Penney during the Great Depression almost lost everything, was able to go into his cash value life insurance and take a loan out to save his company. I've used cash value life insurance to start a medical practice. I've used it to purchase a lot of real estate investments, right? Like I said, it's a place you park money and then you leverage the money to invest in businesses and other things that you want to invest in. So it's not a savings, it's not an investment, per se, because a lot of people get it confused. They think cash value life insurance is an investment. No, it's not an investment. It's just a savings account that you leverage and also gives you a death benefit on your life. So you're using your money twice. So for example, if I put 100,000 at a bank, they pay me 0.1% interest. And if I pass away, for my kids to get that money, they could be subject to estate taxes. And they only get 100 grand. But it got to go to probate court first before the money is released to the children. Now, with life insurance, I put the same $100,000 life insurance. I also get a death benefit. Let's just take an example. Let's just say 300,000 death benefit. Now, if I pass away, my kids get the check for 300,000 tax-free. no probate court, no government interference, none of that. But in the meantime, I could still take a loan against that money because the insurance company is paying me anywhere from 3 to 4% guaranteed interest rate. Man, that's a win-win situation.
Yeah, it's a. I think that's a great way to talk about it and to describe it as a savings vehicle, tax preference savings vehicle, because it does a lot more things than I think the people realize. So
Yeah.
when you're talking to people, how do you prioritize? I mean, it's going to be different for everybody, but is there anybody that you look at it and they say, I want to do this, but you say, I don't think you're ready to do it yet, or this maybe the situation isn't right? Who is it not for?
Yeah, in the past, when I first got into the industry, I will say that, yeah, because I run into people that have so much debt and they can't even save. And they say, well, when we finish paying off this debt, we'll start saving. But then when I start driving back home, I start feeling like, man, why can't I help this person? So we developed a system that allows us to help just anyone. Doesn't matter how much debt they have. We're able to help them because we develop a software, one of my business partner, and the software, we basically help people get out of debt and build wealth at the same time. So it don't matter what level of life they're in, don't matter how much money they're making, and no matter how much debt they have, we can help them. The key we believe is if we could have you become debt free and build wealth at the same time, man, you're gonna have a voice. You're gonna be, the stress you'll be relieved from stress in your life. I mean, so much stuff you could give back to your families and all that, because so many people pass away or die because they're stressed out and they work, they hate their jobs. I mean, and the job they don't see an ends meet. So we have to develop a system that allows our clients to become debt free and build wealth at the same time.
Nice. I appreciate that. Well, Douglas, the people are ready for that difference making tip. What do you have for them?
Never forget to take care of your future person. So whenever you pay cash for anything, remind yourself to pay back your future person, because your future person is expecting that money to compound and grow. So if you pay cash, treat it as if you because that's when you pay cash for stuff, that's self-financing. So when you self-finance, that's same thing as going to a bank and borrowing money. So now if you self-finance, pay back, because your future person loaned you the money and they're waiting for a return on investment. Instead of you just saying, oh, I pay cash, I don't owe anybody. No, you owe your future person the money. So pay back to them.
Well, I think that is great stuff. That definitely gets it. Come on. Douglas, thank you so much for coming on. Where can people learn more about you? How can they engage with you?
Yeah, definitely. So I'm on Instagram, of course. I'm Douglas Eze. I have a course that I teach called havemoneyforever.com. You can go on that website, havemoneyforever.com. And just tap in. It's a very simple course. We teach just to teach you all the strategies that will help you build wealth, protect your wealth, and then pass it on to the next generation tax-free.
Excellent. If you enjoyed this as much as I did, show Douglas your appreciation and share today's show with a friend who also appreciates good ideas. Find Douglas on Instagram, and that is DouglasEze. And then go to havemoneyforever.com and take advantage of that course that Doug has been talking about. Thanks again, Doug.
Thank you.
And until next time, keep fighting the good fight. We are all in this together.